There's something transpiring to see this dramatic move and strong physical buy-in, with the paper market having no ability to slow it down or reverse it. To the 99% of people that don't own gold, ask your financial advisor, how come we don't own the number one investment for the last 25 years? That's the question that I think goes unanswered, that should be answered.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce Silver Valcambi Bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce Gold Valcambi Bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Grandich from Peter Grandich and Company. Peter, thank you so much for joining us today.
Always a pleasure, Elijah, as we get to a magic number.
Exactly. It's crazy. We're almost at $50 silver and $4,000 gold. What do you make of the markets at the moment?
Yeah, I just actually put out a report about it. It's an amazing number, even for somebody that was banging the drums as hard as he could between 1,300 and 2,000, thinking that if we got to 4,000, it was 3 to 5 years at least before we'd get there. And here we are. There's something transpiring to see this dramatic move and strong physical buy-in, with the paper market having no ability to slow it down or reverse it. You can start taking some guesses at what it could be. There's a whole bunch of things, from a canary in a coal mine, of what's happening in different bond markets around the world outside the U.S., what's happening with government shutdowns and the stock market behaving as it continues, as if nothing can ever harm it, including really a 21st century pyramid game now, where these semiconductor companies are investing in each other, and somehow passing the money around makes them all good. So there's a whole bunch of things, but I sit here as someone that, I don't know if you could have been more adamant bullish on gold these last few years. I mean, in the end of 2021, I sold all my stocks and bonds just to own physical gold. And yet I still sit in amazement that as you and I speak, we're just, a hair away from 4,000 and one more little push at $50 silver.
Certainly. I think, as you mentioned, it's been a crazy ride over the last couple of years. I mean, we broke through that $2,000 level just about 2 years ago, and people were being cautious towards, were being skeptical that, we're going to go to 3,000 right away. Well, we went to 3,000 right away, and we're pushing 4,000. So it's doubled over the last 2 years, which is just insane. And silver's done the same.
Yeah, and we've done that without, certainly here in the U.S., I can only speak to, Elijah, and that we've not done that with typical investor participation. Still, I have a separate planning group, and still to this day, we see 5 to 15 new prospects a week, and not 2% of them have 1% gold in it. So it's not like this has become, the reason it's going up is because so many people are getting involved in it, like you see in technology or stocks. You could then beg the question is, what if they do start getting involved in it? What's the number? And that's what you're going to have to believe in for much higher prices over time. But for now, it's still a great accomplishment and a good thing. And there's two separate holders of gold right now, and I've been both, and I have both. Listen, if you own gold because you're concerned of a whole bunch of social, economical, and political, don't even think about selling it. Be glad that you bought it a lot lower because you got insurance for a lot cheaper price. If you don't own any and you're concerned about the social, political, and economic, what's stopping you from owning it? But if you bought it between 1,300 and 2,000 because, hey, I just thought I could make money in it, when you got doublings, you got to start thinking about taking something off the table. So no two people are like, I'm not a big believer, although I finally did put out these so-called model portfolios. I never liked them because no two people are alike. Many times spouses aren't even alike. But I do think overall, those of us like yourself and your company who've been adamant about ownership of gold, listen, I put out some numbers today. Just since 2021, the end of 2021, when I said get in gold, gold is up 4 times what the Dow has done. And it's up 4 times since the millennium began. Now, what I beg the question is to the 99% of people that don't own gold, ask your financial advisor, how come we don't own the number one investment for the last 25 years? That's the question that I think goes unanswered, that should be answered.
Certainly. And for those that you're talking about who have bought earlier and are considering taking some off the table, what are the considerations you think people should be thinking about in that area right now?
Well, it's just a matter that if gold wasn't for what a lot of people, listen, a lot of people own gold because they're concerned they want to have an alternative to paper currencies. They're concerned about economic and social issues and all. If you have those concerns have only grown worse. So there's no reason to remove your insurance policy now, that, especially if you bought it lower. But there's people that bought gold, I've had them, that bought it simply because, hey, I thought it could be better than stocks and bonds. If that's the case, then you should use some sort of scale-up program. As it goes higher, you should liquidate. Listen, I'll say this again. To get much above $5,000 in the next 12 to 24 months, even though we're already approaching 4, things, if we think are bad now, are going to have to be a lot worse. Now, part of this also is we've seen just tremendous physical purchasing out of the Far East, particularly in China. The difference between us Americans and our Chinese counterparts, they spend weekends in the mall taking hard-earned dollars that they made and buying physical gold for ownership. Here in the U.S., where 2/3 of the people are working paycheck to paycheck, they're borrowing money to go buy things a lot of them don't need that they can't afford to pay for on weekends at the mall. Now, I think the Chinese are going to come out a lot better off than those folks. And so there's changes afoot. I also think, and I go back to an old standby, I think, since you and I started talking, and all this talk early in the year, the death of the BRICS, and Trump is going to break their kneecaps and they're never going to stand. Here's a little secret, ask people. How many trade deals have actually been done? How many are done, signed, and enacted the way Trump said? You don't even need one hand to count them. That's another reason why gold is being bought, because people outside the United States recognize that the de-dollarization is real. The less concerns about wanting to be involved in the U.S. and its money is occurring, and there's groups outside, especially in the Far East, that are willing to look at trading among themselves without the U.S. participation and in an alternative to paper currencies, particularly the dollar.
Now, with respect to, I guess, where this market is going, you mentioned how, many money managers, or investors out there don't have anything in precious metals. So it seems like that could be, if they are going to get involved, that could be a huge catalyst for even higher prices from here. We just heard from Morgan Stanley's CIO the other week. He was suggesting, what if we, instead of the 60-40 portfolio, we have the 60-20-20 portfolio, where we have 20% in gold, which is insane. Not insane, I guess, maybe in our space, but for the traditional or the conventional financial planner, that seems way above what is normal. Your perspective on that, if the public starts moving into the sector more?
Well, that conventional financial planner, I don't believe in, and we believe traditional financial planning doesn't work. And look at we had the 2 greatest bull markets ever in stocks and bonds, and most people still can't retire. So that traditional stuff, but 20%, now, I'd be glad with 2% going in. We can't imagine what the price would be if suddenly people looked at it that way. Let's not forget that right now, it's still kryptonite to most financial advisors. And what they have people in is still getting people's attentions. The technology, the cryptocurrencies and all. Can you imagine if those things just stop going up? Forget about going down. Just stop going up. So the people who want to believe in much higher gold prices, that's going to come from money moving out of financial assets for real. And can that happen? Yes. I will say this much. I think once we get the prints of 4,000 gold and $50 silver, and I don't mean 2 seconds after, maybe days or a few weeks, that's probably going to be a period where we're going to get a pause or some corrective action, because the markets are very, very overbought, particularly in gold itself. But for somebody that's looking into 2026 and all, and I'm going to go back and I'm singing to the choir, it's your business, it's not mine. We don't have any, I don't get anything from sales or anything. But I will tell you this, you need to have gold and silver as an insurance policy. It's been that way for years. You had a chance to buy it cheap. It's not cheap anymore. But given everything that's happening in the world, and as I still see these portfolios that come into our office that are 100% financial assets, it's a must. And the very fact that a Morgan Stanley, who literally lives off the sale of financial assets, is willing to suggest openly 20% interest in gold, that tells you changes are afoot in the financial service industry. And you'll know when it's time for you to get out of the business when you start seeing them having ads to buy gold. Then, and only then, will we probably reach the ultimate peak.
It has been eerily quiet over the last few months in the retail bullion industry. Just in the last month, though, we have seen a pickup in demand. Some wealthy individuals buying, especially gold and silver eagles. Your perspective on that it seems like the retail public is just not, we have seen large retail investments in the past, but it's not until just the last month or so that we've actually seen a pickup in retail demand.
This move in the physical market is strictly basically coming out of Asia. It really is. It's dramatic. Central banks continue, the Chinese, that, et cetera, and all. That sooner or later, and it will probably come after we hit that number, and the general financial media spends more than 30 seconds talking about gold at 4,000 and silver at $50. We'll have a corrective consolidation phase, and then probably in 2026. 6 months from now, you'll be speaking about, wow, Pete, we're really seeing people show up now, particularly since the stock market's peaked and everybody's not running to crypto and AI. And that'll be the combination. That's what, if you want to look for much higher gold and silver prices, that's the formation and the kind of change you're going to need to get much higher prices. But don't lose sight of how well this metal has performed without these people participating.
I think that's key. And going forward here, essentially what you're saying is that you're looking for the stock market to peak, cryptocurrencies to peak. And once those assets are no longer kind of what is producing gains for people, right? What are producing gains for people, then they will shift into the precious metals.
Yeah, and you don't want to crash. So everybody thinks, oh, wow, crash. And no, if we lose 20 or 30% overnight in a matter of days, we won't get that transfer of wealth transfer out of those markets. As you want it to roll over, kind of peak, go sideways, decline a little, but we don't want to crash. A crash will benefit nobody. It may make you feel good for a moment, but it'll kill the rollover effect that otherwise would occur. So outside of a crash, gold and silver should work higher.
It seems like during crashes, you have a lot of people getting margin calls and they have to sell anything, right? And gold and silver miners all take a hit at the same time. Is that kind of the caution that you're warning against? That's why you're saying we don't want to crash?
Yeah, it's not so much that it's even margin calls at this point. It's just that when a market crashes, people sell everything first and ask questions later. Even if they don't have a margin call, they go, oh, well, gold's going to go down because there's a stock market crash. I better get out. And it becomes a self-fulfilling prophecy. So outside of a crash, that's the only asterisk that I would put. And then no one knows if and when those things are going to happen. I will tell you this much. For the first time in years, I've actually implemented bearish bets on the U.S. stock market. In the last week, I've taken in, and as you and I taped this morning, I actually looked at the NASDAQ and decided to take bearish positions. So while I think a stock market can go down, as much as I have those positions, overall, the rest will be hurt if there's a crash. So I think the best of all worlds is a peaking and a rollover than a sharp decline in the general equity market.
Certainly. And where the stock market is right now, it seems like it just keeps hitting all-time highs, but you're saying that you're thinking the rollover is going to be happening pretty imminently if you're taking bets against it.
Yeah, and remember, it's hitting highs, but not dramatically new highs. It was up 7% 3 or 4 months ago. Now it's up 9 or 10. That's not a market that's now. A few of those stocks have gone insanely high in that regard. But I would just tell you this: as great as the U.S. stock market appears to be doing, markets outside the U.S., where I focused on at the beginning of the year, are greatly outpacing the U.S. And that's one of the other things that I believe it or not has been buoyant to the gold market. China, which many people predicted to death 12 or 18 months ago, they were going to collapse. I was in the opposite camp. In fact, I was called anti-American by a couple of people because I was so supportive of their markets. And the fact that they have turned around and have withheld the pressure from this, this big stick that Trump brought into these trade wars, China is getting its act together again. And by its stock market remaining strong, it's allowed the people to get into the physical gold market in a more powerful way.
And we've talked mainly about the physical precious metal markets. And your latest video, you were talking about the miners as well, and those who have made profits in the physical precious metals might want to start thinking about moving into assets that might have a greater return. Can you discuss that?
Well, leverage-wise, first of all, I think you should always have physical metals first, even though I'm singing to the choir. But that would be whether I was talking to you or anybody else. Physical metals, you have to have some insurance. After that now, from this point on, let's take gold's at 4,000. And let's say it goes to 5,000. That's going to be a 25% gain that you had on the gold. I can assure you almost every major producer will see its stock go up 3 or 4 times that return, because 98 or 99% of that gain will go to their bottom line. Their cost doesn't increase dramatically just because gold went from 4,000 to 5,000. So the real leverage is in the producers of the companies. And you're going to see, we're already seeing it, but you're going to see just bigger and bigger and more M&A in that industry. Then, of course, the drip down effect hits when the junior resource companies, who are still not participating in any major way, but as some of them start to merge or be taken over by these majors, they'll have their day in the sun as well. So yes, mining shares over high-risk junior resource stocks, but both of them can outperform the physical metal because the leverage that'll be offered to them will be greater. But with that leverage opportunity comes higher risk. So you have to measure both your mental and financial tolerance before you participate in that side of the market.
It is interesting to think about that because, this next $1,000 in price, as you mentioned, is only a 25% gain when, from 2,000 to 4,000 was 100% gain, right? So it does definitely change the dynamic here.
Yeah, and think about this. So right now, the average gold producers, some say, is between 1,200 as little as 20, to maybe as high as 2,000 as the total in cost. That's what it costs them, and then whatever they get extra for that. Well, now they're getting twice as much as that, but $1,000 more would be 150%, and their expenses aren't going to go up that much during that time. So that's where you see the real leverage. That's, as we like to say, a lot of us have been saying that follow them. They've been legally printing money with record free cash flow, and that's only going to continue more and more here for the next several quarters.
Now, one of the things that I wanted to touch on as well is that you just recently made a video and saying that you're going to be shifting a little bit of your focus from the mining sector to the personal financial planning business that you have. Can you share a bit about this and kind of the shift that you're making?
Well, it's funny. I left the metals and mining industry in 2013. Never thought I'd be back involved in it. Have been involved in this financial planning group here in New Jersey. We manage over $1 billion. And I kind of got my toe wet in 2019. And by 2022, I was full-fledged back in. I don't work as a IR or any of that kind of stuff. I had a blog that had some sponsors. But I found myself getting away not only from the general financial planning group, but also the faith in finance, which I believe the only reason I'm still alive, Elijah, and probably why we've come together, because we both share a strong belief in our Catholic Christian faith. And so with the tremendous gains that we've had, I've had the best 5-year period ever in my career. Clients who chose to listen would have done just as well. I just felt that it was time in the latter stage of my natural life, approaching 70 years old come April, that I need to refocus back on the faith and finance. And therefore, by year's end, I will not be involved in the junior resource market, no more blog sponsors, things of that nature, and trying to speak more about matters of finance from a biblical perspective than what some junior resource or stock may or may not be doing. And that'll be the big change compared to the last 3 years.
And you emphasize kind of a focus on faith as well in your financial planning. Do you want to, I guess, share a bit about that? Because obviously, one of the things that we sometimes focus on when we have you on is the faith aspect. And I think it's important in the tough financial times we're probably going to have ahead to have, that real grounding, not in physical precious metals, although that's important, but really to have your grounding in faith first and foremost, because we really can't predict the future, right?
Well, those of us who tried over these last several decades looking into a crystal ball, the only thing we became experts in is how to eat more broken glass. So we put our pant legs on one leg at a time like everybody else. But one of the things that's real important to me is that in the faith, if you take a biblical perspective, Protestant or Catholicism or even in Judaism, there's no support of the biggest thing that Americans have got hooked on, and that's debt. That's the reason we're in such a huge problem with $37 trillion in national debt, consumer debt, corporate debt, and yet no teaching of faith that I know of, certainly from biblical proportions, has supporting of that. In fact, it's full of warnings about what debt can lead to. Now, I've been on that kick for almost 25 years. Wherever I talk to people, they say, what's the best investment? And I say, pay down your debt, get out of debt and all. And that's going against the principle because consumer debt continues to expand and all. But part of that is also the fact that whatever or who's ever in charge for the coming years, those of us that still have something left, the wealth, are going to be kind of trying to be taken from, because more and more people are going to need it because the government just takes from one group to kind of give to another. And one of the things that I also believe that it teaches us that, yes, we have to be prepared to be willing to help others, but we need to do that by being as efficient and effective on what we have. And typical financial planning doesn't do that. Typical financial planning, which used to be a pad and a pen when I started, and now it's computer programs with 400 pages and all sorts of graphs and all. But basically, it's chasing net worth. It's on the principle that Wall Street has, that more money will equal more happiness and solve your financial needs. But in order to do that, you have to take risk, trying to hopefully a past investment product performs as well, if not better, to reach that goal. And what we find in my work is that most people are not cash flow literate. They're illiterate. They're not effective for what they have. So first, being efficient and as effective as you can be on what you have is a guiding Christian principle. And I'm not in the group, by the way, because there is a sect within, primarily in the Protestant community, but there are some Catholics that fall into it as well. And that's the Christian prosperity, that we're all supposed to get as rich as possible and that God wants us all to be rich as possible. God does bless, and there's people in the Bible that he loved very much that were wealthy, but he puts a much extra burden on those of us who are gifted with extra wealth. And part of my work is trying to get people to recognize that you're called more as someone with some wealth to help than some person that's just, getting by. And that's the difficult thing. That's why Jesus uses all sorts of parables, from the rich man to the lady with just the coins and all, to try to teach us that we're not to get attached to money, and hopefully that, for what remains of my natural life, I can get more back into that, because I lost myself in this metals and mining boom. And don't get me wrong, it's been highly profitable. And there's really no one that would be mad. But I really think it's time that I need to do more of the faith and finance and less about metals and mining and stocks and things of that nature.
Well, sounds like a fantastic change there for you. We really commend you for that and all the work that you've also done in the mining sector as well. So we really appreciate your time as always. Before we let you go, for our viewers who are interested in learning more, they can go to petergrandich.com. But your take, I guess, it is confusing time in the markets, a crazy time in the markets as we see precious metals increasing significantly, kind of everything across the board increasing. It seems like what you're saying, the takeaway I would say from this interview is that things are potentially about to change in the other markets, the stock market, in cryptocurrency, and people should be prepared for that. And a lot of that hopefully is going to flow into the metals sector. But what should be, I guess, at the top of people's minds right now who are in the markets?
Well, the ultimate crime in investing is never being wrong. I've been wrong enough times. It's staying wrong. So you have to have hope is the best spiritual strategy you can have, but most people use it as their investment strategy, and it just doesn't work. It's how you get people now are trading emotion. I'll give you a real quick example. Someone who bought tremendous amount of physical gold at much lower prices was listening. It was great. And now when you speak to him and say, listen, you made a lot. You say, oh, no, this is only beginning. This is going to, well, what's your process on how you're going to plan on dealing with this? I'm just going to watch it. Emotions are not the way you be successful. You have to have a plan. I worked for 13 years in the NFL with the New York Giants. It may not look like it now the way they're playing, but I worked with them through 2015 when they won 2 Super Bowls in that period. And the reason I bring that up is every coach has a game plan. They all do. They spend 3 days preparing it. And then if the game plan isn't working in the first half, they go into halftime and change that plan. Most people right now, even some people that are in metals and mining, don't have a written or idea plan, Elijah. They're going by emotion day to day. And that's a poor decision-making process. Most people, when they look back at things that went wrong in their life, they'll say, hey, when I got too emotional, I was caught up in stuff and I didn't make the right decision. You need to get a written, formidable plan going forward here. And irregardless of what happens, you stick to that plan and you make the changes accordingly.
Definitely. I think that's very good advice there. Yeah, having a plan is so important, whether it be a price target, whether it be whatever it is, a ratio, the Dow Gold ratio or whatever, kind of having that in your mind, here's where I'm going to exit some of my position or whatever. I think that's so important. So we don't, that's what happens in manias, and precious metals are probably going to become a mania. So if we just, get caught up in that, you're not going to optimize profits, probably. It's a lot less likely.
I always like to say to people, write your plan with a pencil, but make sure the pencil doesn't have an eraser, because people just change their plan based on what the market is doing. Unless you fundamentally see the reasons now that that's no longer valid, that plan, you need to stick to it.
Fantastic. Well, Peter, we really appreciate your time today. Thank you so much, and God bless.
Thank you, my brother, and God bless you. And thank you for the opportunity to share about our faith.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce Silver Valcambi Bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce Gold Valcambi Bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.